All right, let's dive right in. Today, we're going to tackle the world of crypto charts, and our goal is pretty simple: to take something that looks like pure chaos and turn it into a clear story that you can actually read. So, be honest. Have you ever stared at a crypto chart and just seen a messy, confusing jumble of green and red lines going all over the place? Hey, if that's you, you are definitely not alone. But what if I told you it's not random at all? See, the thing is, every single one of these charts, it's telling a story. It's a picture of a constant battle between buyers and sellers. It's a whole narrative of human emotion, of fear, of greed, of hope. And today, we're going to learn how to read that story. Okay, first things first, we have to completely change how we look at this. We're going to stop seeing random noise and start looking for the narrative, the actual story that the price is trying to tell us.
You know, every story is made up of words, right? Well, in the world of charts, our words are these things called candlesticks. Each one is a tiny snapshot, a single chapter, maybe a minute, an hour, or a day, in that ongoing fight between buyers and sellers.
All right, so we've got our basic building block. Now let's figure out what it actually means. We're going to break down how to read these candlesticks, because this is where we start learning the actual language of the market. It really boils down to one simple question. In this little slice of time, who won the fight? If you see a green candle, it means the price ended up higher than where it started. The buyers were in control. A red candle? The opposite. Price ended lower. The sellers won that round. It's the most basic, fundamental signal you can get.
But here's where it gets really interesting. See those little thin lines sticking out the top and bottom? Those are called wicks, and they tell a tale of struggle. A long wick on top means the buyers tried to push the price way up, but the sellers just slammed it right back down. A long wick on the bottom? Sellers tried to dump the price, but buyers jumped in and said, nope, not happening. Wicks show you where the price was rejected.
Okay, so if one candle is a word, a whole bunch of them together form a sentence, and that's what we're doing now, zooming out to find the plot of our story. We're looking for the market's overall direction. We're looking for the trend. And trust me, it's way simpler than it looks. An uptrend is just a staircase going up, a series of higher peaks and higher valleys. A downtrend is a staircase going down, lower peaks, lower valleys. And sometimes, the market just can't make up its mind. It gets stuck moving sideways in a box. We call that consolidation. Knowing which of these three phases we're in is absolutely everything. And this right here, this is a huge point. Think of the trend like a river. Trying to swim against the current is exhausting and usually a bad idea. The real advantage, the real edge, comes when you figure out which way the river is flowing and you just go with it.
So we can read the words and we can see the plot. Now let's grab some special gear for our toolkit. Think of these like a detective's tools, indicators that help us see clues in the story we might otherwise miss. We're going to look at three of the big ones. We'll use moving averages to get a feel for the underlying trend, the RSI to check the market's pulse and momentum, and Bollinger Bands to see how wild or calm things are. Let's hit them one by one. First up, moving averages. Imagine all the wild, jumpy price action from second to second. A moving average just smooths all that chaos out. It gets rid of the noise and shows you the real, true average direction the market is heading. And here's the key. When the price is living above that average line, the general feeling, the sentiment, is bullish. When it's hanging out below the line, it's bearish. And you really want to watch for crossovers when a short-term average crosses a long-term one. It's like watching the market's short-term mood suddenly change its long-term mind. That can be a really powerful signal.
All right, next tool, the RSI, or Relative Strength Index. If the trend tells you where the car is going, the RSI tells you how hard the driver is pressing on the gas pedal. It's all about momentum, the speed and the raw strength behind the price moves.
Now, the classic textbook rule is this. An RSI reading above 70 is considered overbought, meaning it might be getting too expensive, and a reading below 30 is oversold, meaning it might be a bargain. But, and this is a really big but, there's more to the story.
And here's the real secret. When a trend is super strong, the RSI can just hang out in that overbought zone for a long time. So instead of thinking of it as a stop sign, think of it more like a flashing neon sign that says, warning, this trend has serious power. It's a confirmation of strength, not necessarily a signal to sell. Last tool in the box, Bollinger Bands. These are awesome. They basically just give you a visual for how volatile the market is. When things get wild and crazy, the bands expand. They get wider. When the market is quiet and calm, they contract and get tighter. The really cool part is the squeeze. When you see those bands get super tight, it means the market is holding its breath. It's coiling up like a spring, building energy for a big move. Now, the squeeze doesn't tell you which way it's going to break, but it's a huge heads up that something is probably about to happen.
All right, we've got the words, the plot, and our special tools. Let's put it all together now. This is the final step where we go from just seeing lines on a screen to actually speaking the language of the market.
This might be the single most important thing to remember from all of this. Indicators are not crystal balls. They do not predict the future. The price itself, the story being told by those candles in that trend, that is the ultimate truth. Indicators are just lenses that help us read that truth a little more clearly.
So what's the game plan every time you look at a chart? It's this simple three-step process. First, read the candles. Who's winning the fight right now? Second, zoom out and identify the trend. What's the bigger story here? And third, pull out your indicators to get more context and to confirm what you think you're seeing. And when you do that, something amazing happens. The chart it stops being noise. You start to see the structure. You can feel the momentum. You can literally watch the emotions of the crowd, all that fear and greed, playing out in real time, right in front of your eyes. So I'll leave you with this question. You now have the keys. You have the tools to translate this visual language. The next time you open a chart, it's not going to be noise anymore. It's going to be a story waiting for you to read it. So what's it going to tell you?